The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun and exciting and hopefully profitable trading week. My name is Mark Longo, and I will be your host for this hour-long sojourn through the world of options. And I am joined, as always, by quite the motley cast of characters, starting off with the man from the mountains himself, neither to my left nor to my right, but dead center ahead of me, is, of course, Uncle Mike Tusaw, the man from Know Your Options Inc. Uncle Mike, how are you doing this fine Thursday afternoon?
Oh, doing well. In the mountains of Illinois, we need some warmer weather, though. This is kind of the weather that you don't get any snow, so you don't get to go snowmobiling. And it's not really cold enough to do anything else, but it's just cold and nasty. So in the mountains of Illinois here, we need some warmer weather.
Yeah, I thought this cold snap was behind us and all the crappy weather for the year was done, but apparently we had some more in store for us, so lucky us.
Yeah.
And we are
love it.
Yeah, and we are also joined on the panel today in the rotating Options Express seat by none other than Mr. T-Nav himself, the broker extraordinaire over at Options Express. Mr. Navabi, how are you doing today?
Hello, thank you very much. I'm doing very good. How are you doing, Mark?
I'm doing good now that we've got the old Skype working again. We had some interesting issues. I'm not sure if they're on Skype's end or somewhere else, but they're somewhere. And, you know, the gremlins always seem to conspire against us on this show. But we have defeated them for now. Let's hope they will stay slain for the entire show. And then last and only sometimes least do we have the greasy meatball himself. He is greasier than ever. He's greasier than ever today, folks. I can assure you. Grease quotient is at maximum. Mark Sebastian from OptionPit.
I don't know if you know this, but Teflon Corp has hired me to assist them in their pot and pan making. What they do is they feed me Italian food and then clean off my hair, and that's what all you ladies are using to make sure your eggs don't stick to your pan nowadays. So.
Lovely imagery to start the show, as usual, Mr. Sebastian.
I'm a man of the people. Man of the people.
You have earned your nickname yet again, sir. And with that banter, we shall roll right into the trading block.
The trading block.
And welcome to the trading block. If you haven't figured it out by now, by show 47, this is indeed the segment of the show where we discuss what is...
Is this show 47?
This is show 47.
You cannot be serious.
We are getting up there, sir. We are cranking.
Holy bananas. What are we going to do for our...
The Big 5-0. I don't know.
Yeah, the Big 5-0. I think we got to give away a prize.
Okay. Let's give away a dream date with Mark Sebastian. How about that?
Yeah,
chaperoned by Uncle Mike.
I don't think my wife would like that so much. So
I'll make sure it's legit. I'll chaperone it.
Given that the bulk of our audience is men, I think your wife might not have a problem with it.
Or would she?
Oh. She's concerned.
Um,
All right, then. And this is indeed the trading block. Number 47, not counting the preview shows. If you count the preview shows, it's probably over 50. This is the segment of the show where we discuss what's caught our eye in today's activity from a broad market perspective, and it was another mild day on the street for the most part. The Dow closed down 31 points almost, S&P closed down about 2.5, NASDAQ closed up 4 points, and the VIX cash was essentially unched on the day. And we saw a lot of this downward activity starting out with Intel getting a nice downgrade, and that spur of negativity seemed to just spread throughout the sector today. Of course, crude oil didn't help. Crude oil kept creeping up, and I'm sure Uncle Mike and Mr. T-Knob, you guys were watching crude pretty heavily today.
Yeah, I mean, I don't want to steal any of Tim's thunder, but that seems like the only thing that really happened in the market today. I mean, I called up Options Express just to make sure that there was trading going on today. But, there was not a lot going on. I know gold and silver came up a little bit, but for the most part, everything that we're watching over here at Know Your Options, the only position that we're in that had any significant movement at all was First Solar. Other than that, not a lot going on.
You guys size players in the solar arena?
Not too much, no. It's one where the Japan thing, it's actually helping us with First Solar. I think that we like the company long term, and we're just basically playing some married puts on it. I'm just not doing my ideal preferred collar style plays on it. It's just not quite the best fit for that. But for the most part, and we don't really have a very big position in that, but everything else, it's been pretty flat on the day.
Can I just make a quick comment about solar? All right.
No.
Everybody's sitting here saying, "Oh, there's no way solar energy. It's the clean energy." Do you know what kind of disgusting, corrosive materials are used in some of the solar technology? My understanding is some of that stuff's just as bad. Some of the heavy minerals used in solar technology are just as bad as, what might be the waste from a nuclear plant.
Yeah, but we don't look down the chain, We look same argument with nuclear. It's cleaner in the upfront, but then getting rid of all those toxins and radioactive waste. Yeah, who cares about that? And the same thing with solar. It is cleaner up front, but all the heavy metals have to go somewhere. I guess they're going to stick them all in Yucca Mountain with everything.
I think
else.
The heavy metals play with the mini metals, don't they?
Oh,
they opened for them back in '87.
Yeah.
But I want to expand on that a little bit more too. I grew up in a dry cleaning family, and so whenever it was Earth Day and things like that at school growing up, I was not the popular kid in class, let's say. But with that, just don't get me wrong, I'm not saying that we need to pollute the environment or anything like that, but if every dry cleaner kept doing what they're doing for the next, I believe it's 1,000 years, we still wouldn't do even half as much damage as what Mount St. Helen did to the environment in one fell swoop. So a lot of stuff, don't get me wrong, I'm not trying to say that I hate the environment. I am the man from the mountains, and I am an avid fisherman and hunter, but my point is a lot of that stuff is overblown and politicized, and that's I'm the First Solar because of the fact I think it's going to go up in value. And that's the bottom line with it.
You heard it here first. We will edit this show to make sure that Uncle Mike says he hates the environment.
Yeah, I can't believe you hate the environment so much.
This is Uncle Mike. I hate the environment.
There you go. All right, you Chicago folks, you polluters, the wonderful, bustling, mountain-esque suburbs. So, anyway.
And Tim, what were you watching on the commodity front today?
The grain market. There was a grain report. I'll talk about that a little bit later, but that was quite bullish. I will say something that Mike Tusaw had mentioned earlier. That he called us and asked if there was trading. When I walked in this morning, if it wasn't for the cold weather outside, I could have thought it was August. It really was quiet. It's a little strange. The crude oil markets, you're right. They were movers today. But also, it's kind of odd in that, there was some news. I know there's been news about Libya and the Middle East, over the last days, weeks. But, I think overnight there was some news about how there's some defectors from the cabinet of Gaddafi. I just read today even there was a few more. And crude rises. So, it kind of tells you what kind of markets we're in right now, or at least today. doesn't seem to be following any rules right now. I attribute that pretty much just to the end of the quarter.
And Sebastian, have you been keeping an eye on our good old friend, the skew index? It's starting to creep back up there.
Yeah, but, the thing you've got to remember, I actually have now officially developed my own index based on skew.
The greasy meatball skew index.
No, it's called the CBOP, I like to call it. It's the CBOE Option Pit Curve Vol Index, and it's still in final development because I was trying to come up with an easy way to avoid some of the double counting the curvature. Because as you know, VIX does in fact already take into account some of that curvature. And what I came up with was we multiply the skew index, and this is with the help of Jared from Condor Options. He and a couple other people. What we're going to do is we're going to take instead of the VIX, we're going to use the VXO and multiply it times the skew index. And the idea is that will give us an idea of where the downside of the curve is trading relative to, VXO. So, because that skew index doesn't give you anything without a point of reference, right? If it's 1.25 and vol is super low, then the curve is cheap. Okay? If it's 1.25 and vol is and the VIX and the VXO is at 35, then the downside of the curve is super expensive. There's a kind of a scalability to it. So what we're going to do is we're going to kind of take the skew index times the VXO, and that's going to be the CBOP curve index.
So how do you account for all that fun 1.5 then between the SPX and the OEX?
Yeah, that's the other issue there.
That's a big issue. It's an interesting idea. I like it. If you can find some sort of arbitrary coefficient of 1.5 or something along those lines that could smooth that out for you.
Yeah, you'd have to. The problem is VIX includes skew too, though, right? At least VXO has, it's got a lot less. It's a little more pure of a number, and I don't think in that 1.5 stuff, does that really affect volatility that much?
That's the question, because obviously I joke when I say the 1.5, that's the old referral for the OAX versus SPX rolls and adjustments you would do when you were trading those. But it obviously isn't a 1 to 5 relationship when it's on volatility.
No, it's 2.23 or something that.
Something absurd like that.
But believe it or not, the vols are structured almost exactly the same.
Probably using the O, you probably could get 80% of what you need for the X,
Now you get the OEX and the SPX correlated about 0.98. And the OEX is cheaper, but the vol structure, especially at the money, is, almost identical. So if you just consider that it a de facto SPX vol, you're going to pick up, it's going to be probably I would argue that it's going to give you a better idea. Skew times VXO will give you a better measure of SPX puts than VIX times skew, would be my bet.
Whatever you come up with, it can't be any more obtuse than what the CBOE has put out already with this VIX index. If you guys looked at this, it's this inverse index. It's an arbitrary number between essentially 115 and 150. Could it be any more obtuse in the way that they release it?
No,
it comes out once a day through an Excel time series. You have to get the number. It's
No, it is kind of intuitive how they're doing it though. What they're basically saying is how not log normal is the curve, and then applying a number to that curve, and that's all they're really doing is they're trying to judge. Okay, because in theory, if you read anybody who's read Natenberg, in theory, in a flat skew environment, distributions would be log normal. Okay? What they're measuring is how non-log normal the curve is relative to what a log normal curve would be. It's to me it's somewhat intuitive. Others I can imagine that wouldn't be.
I think the intent is sound. I think the presentation and the way they've distributed it is that's.
I actually had a piece I wrote on the VIX. And one of the things I pointed out was I was looking at volume and open interest in SPX at the money options. Okay? And then I was kind of looking at vol and open interest and kind of comparing them, and I was noticing that at least with the at the monies, the weekly options had a higher volatility and a not insignificant volume number. Yesterday, for instance, the Marches that are expiring tomorrow had about 60% of the volume at the quarter strikes that the regular April did. Yet none of these are being measured by the VIX. So my point and my argument is that they're going to have to reevaluate how they measure VIX because they're skipping a lot of the people that are going in and buying this event risk. The weekly options that expire tomorrow and next Friday have a higher vol than the regular monthly option because players that are playing Friday's number, the number that when you're listening to this will already be out, are not playing in the regular April month anymore. They're playing in the weekly options. So we should see, as this volume really starts to move, a smoothing of the VIX and a reduction in vol. What do you think about that, Mark?
I know my name's not Mark, but I'm going to interrupt just to say that I think that you are right in what you're seeing there. A lot of our people that we have been doing condors and iron butterflies with in the past, we've switched, at least for the time being, because of that fact, in that there is a lot of high vol in the weeklies. So what we've been doing is we've been buying monthlies and selling weeklies in various ways, actually on the SPX, because of exactly what you just said.
Yeah.
That's your old ratio weekly to front month trade, right?
Oh no, that's another one. But yeah, that too on individual stocks. Yes, that is the old ratio to front month on individual stocks. But on the SPX, we've been doing a lot of these 1-to-1, and it's been working out pretty well recently. Just because of the fact that IV is a lot higher, at least in our opinion too, on the weeklies.
And with that, we shall close out the old trading block and roll right into the odd block.
The odd block.
And welcome to the odd block. This is the section of the show where we dive into some of the interesting and or unusual options activity we've been seeing lighting up the tape today. We're going to kick things off with good old Tesla Motors. And I wish Mr. Griegus was on the show today because he and I have always discussed in the past the joys of writing premium in Tesla. It was a fun one, especially into late last year when they were very range bound and there was a lot of not a nice bump to the downside in Tesla. But this is a name. I loaded up my screens today and I saw that it was up 20%, and I was like, what the hell is going on with Tesla? And
big upgrade.
Yeah, well, the first thing, I didn't see that at first, and all the news I saw was just Tesla sues Top Gear. And I thought to myself, why in God's name would the stock up 20% on suing of a BBC car show? That seemed to be the biggest news of the day, but then if you dig a little deeper, you see the upgrade exactly from Morgan Stanley, who they bump it up to, I guess you can call it super overweight, because they pulled it at a price target of $70, which is absolutely mind-blowing for this one. But yeah, Tesla closed today at $27.75, up $4.04, about 17%. They were up over 20% at one point today. So yeah, a ridiculously bullish day as a result of our good old friends, the analysts. This name does about 3,500 contracts a day, did over 40,000 today. So big bullish day for Tesla. And we saw a lot of activity, not surprisingly, in the June 30s. We saw 3,000 of these going up in one clip with about 70%, lifting offers and previous open interest of just 500 contracts. So this is a lot of opening paper coming in to Tesla in June. And then we also saw the same thing across the board. We saw overall, looks like about 3-1 calls to puts on this name today, going up in a big spike in implied vol. But the bulk of this, like we said, purely bullish activity on Tesla, just lighting up the tape after this upgrade. Apparently a lot of people diving in, this in conjunction, no doubt, with Obama's big speech on moving away from petroleum, just really gave this name a big, strong bump.
I was going to say, were those manufactured? I'm curious.
California, I believe. Yeah.
That's what I thought. Okay, yeah.
California.
I mean, it's, I remember from talking from last show about, Japan and the Japanese automakers versus, some of the other automakers, how they were seeing some strength, and I'm just wondering if, that was on there as well.
Well, Toyota Vol is still way overpriced. If you have any want to own TM Toyota, you can sell puts at like 30-some-odd% volatility, which is just unheard of in this stock. And long term, I don't think they're really going to have any problems. They're probably one of the best manufacturers, not just car manufacturers out there. So just something I was noticing.
And then we're moving on to switching gears to Nabors Industries, Inc., ticker symbol NBR. They closed $30.38, up 31 cents, or about 1%. This is a drilling contractor, and they hit a new 52-week high earlier in the session today, and following another upgrade, so from sell to hold, so the analysts driving a lot of activity today. Surprisingly, though, even with this upgrade, we saw tons of people diving into the May 28 puts. And before we even get into that, this is a name that does about 6,500 contracts a day that did nearly 60,000 today. The bulk of those, about 31,000, nearly 32,000, were in the May 28 puts. They went up for some size today.
Well, we saw a ton of call volume yesterday, actually. This thing has been picking up. The implied volatility on the stock is through the roof. The skew structure is all messed up. If you actually wanted to get long this thing, puts in stock probably made a ton of sense. I think this is a guy that was just hedging a long position. I don't think it was I don't think it's anybody bearish the stock just based on the way the call volume is moving. I mean, the amount of people buying upside calls right now, the best trades you can do are call spreads in this thing. I actually wrote this for TheStreet.com yesterday. The 32s, the 31s, the 30s are way cheaper in implied volatility terms than the 35s, 36s. Well, there are no 36s. 34s, 35s, 37s, and 40s, which are all really overpriced. So if you're bullish to stock, vertical call spreads look like a really, really great do right here. So, sorry.
Yeah, I mean, no, that's what we want. We want people diving in. And, yeah, like I said, that was a sizable size, and I agree with you. Rolling out to May, putting on that kind of size is typically a good indication that the guy has some underlying on that he's looking to protect. Mm-hmm. And obviously the stock's had some good upside lately, and people are maybe looking to keep some of that on the old books. And then switching gears again to Illinois Tool Works, ITW. They closed $53.72, up 17 cents. This is an industrial products manufacturer. One of the reasons I wanted to include this because it just kind of cracks me up. The reason they jumped up today, and we saw a lot of speculative upside trading in this name, was they were included on a list compiled by Reuters of a bunch of companies that, quote-unquote, meet the criteria for Warren Buffett to potentially acquire them. So they put out a list of companies that meet his criteria, and that alone was enough to ignite the frenzy. We saw a bunch of activity on the May 57 half strike. More than, about 7,500 of these went up today on a previous open interest of just 450 contracts. So a lot of opening specs coming up.
Lemmings off the cliff. That's what I say. Lemmings off the cliff.
But yeah, so a lot of upside call activity in this name. Everyone coming in essentially to spec that this is the newest apple of Buffett's eye and that he's going to gobble it up. Sometime these are relatively near term. These are May options, the bulk of them. So people are not thinking, they're not going out and lifting, September or December off this. They're saying he's going to come and gobble it up relatively soon. There's earnings before these expire as well, so this could be a little bit of an earnings play, but I think the bulk of it is obviously driven by the good old Oracle of Omaha himself. So it is funny to see what moves these names and drives some of this unusual activity we see on these names on a regular basis. And with that, we're going to close out the old odd block and roll right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express block. This is the section of the show where we let Tim Navabi loose, and we just pick up the pieces afterwards. So, Mr. Navabi, what is new in OX land today?
All right. Well, thank you very much, Mark. So, yeah, I mean, it was quite an interesting day today. You know, like I said, I walked in today and there were, you know, lots of brokers just sitting on, you know, at the desk. No one's on the phone. No calls are coming in. And, you know, what do you know? We had some real weird movers today. Just kind of wanted to start out here and just go over real quick what were some of the, you know, most actives traded at Options Express. You know, SPY, Apple, SPX, SLV, the RUT, the Triple Qs, Amazon came in there, IWM, Netflix, and VIX. You know, one of the benefits I thought about of mentioning this sort of list on the show here is that, you know, if there are some customers thinking about, you know, considering OX and they're wondering, okay, you know, what do these guys trade? What do the brokers know? You know, these are the names. So, you know, if somebody has an opinion on Apple or any one of these stocks, Amazon, you know, when you're looking for some ideas or you want to, you know, throw some ideas out there, kind of go over risk reward, you know, we'll do that with you. So, you know, I thought that would be just a benefit of kind of mentioning why I list off those names.
Now, of course, they probably shouldn't call up and say, hey, should I buy Apple here or something like that, you know, but if they have their own ideas, they could float them off you and kind of see what sticks.
Thank you. Yeah, that's exactly right. Yeah. I mean, opinions, I can't give those out, and, you know, everyone's got one. So, but yeah, you know, these are some of the names that, you know, are very popular here, and, you know, we see a lot of different types of trades in these, even recommendations, you know, I mean, there are some investment advisory, newsletters out there that, you know, make recommendations on these. So, you know, we do have a tendency sometimes to see some of the same trade, and we can always, you know, kind of walk it through the customer. So that was in some stock land at Options Express. And going over to the commodity land at Options Express, it was quite a mover for the grain market today. There was basically a report that came out, the name of the report, Supplies Inventory. There was an inventory report that came out. There's an inventory in something, I can't think of the name right now. Very bullish, if you couldn't tell by looking at some of the markets. I just want to give you some quick numbers, and then I'll just go over a couple tickers. I'm reading the report, which you can actually also get off of Options Express. It's on the futures research page. And you know, some of the special mentions here in this report. If I can't get the number here real quick, I'm just going to kind of skip it, but extremely bullish. I mean, pretty much the inventories were a lot lower than what the U.S. Than what was expected. I think it was something down like, you know, more than 5% for corn, and I think more about, you know, 1.5% on wheat. So quite a bullish number on some low inventories in the grains. Some of the markets, let me just mention a couple ETFs that's related to some of these grain markets if you're interested. You know, so if you don't want to trade futures, you can trade, for example, like the DBA, that's the Deutsche Bank Agricultural Index. Some of the other ones, one I mentioned not too long ago, which is related to the grain markets here, FUD. That was for food. If someone's, it seems to be in the news a lot right now about the inflation coming in food. Let me just give you a few more, and then I can just quickly talk about some of the energy markets here real quick. There is a JJG, okay, the IPATH UBS grains. There is a COW, that's the livestock, that was up over 1% today. I mentioned the DBA. There is a Rogers International Commodity Agricultural Index, symbol RJA. That was up over 3% today. So, some big movers in the grain markets today, and plenty of opportunity to trade them, whether you're trading futures or ETFs. And then finally, I just wanted to mention, because, we did talk about it a couple times, and that's the natural gas. There was an article that I was reading on Bloomberg, and the title of it was Natural Gas Futures Advance in New York as End of Quarter Spurs Purchases. And basically really what the article is going over, or some of the things that it sort of mentions specifically, is pretty much the bullishness overtone in the natural gas market. Some of the things that they, were talking about, production in the lower 48 states has dropped 0.5% to 66 billion cubic feet a day. That was according to a monthly report. And, just overall volume has picked up. Some things they mentioned, gas futures volume in electronic trading was about 346,000 compared with about 317,000. That's the 3-month average. Volume yesterday was about 263,000. Open interest about 885,000. 3-month average open interest, about the same, 886. So that the last sentence there really didn't prove my point here, but it's a good article. It's on Bloomberg. And again, just, kind of talking about some of the bullishness going on in natural gas, and that's something I know that we've mentioned before.
That's Tusaw's favorite sector.
Yeah.
Only when Sebastian's in the room to get comments on.
Oh, nice. Nice.
Well, Tim, you packed quite a bit in there, sir, in your little segment. I'm still kind of reeling from all the names you threw out there and all the information to process. But a lot of good stuff there, and I'm sure our listeners will love it. I'm sure you'll be hearing a lot of interesting calls coming up. And hey, you can always hit up Tim on Twitter, and he can give you all the recommendations you want there. Just don't call him at OX, because then he gets it. Right. Send him a quick little DM. Hey, should I buy Apple upside calls? Mm-hmm. He'll give you recommendations all day.
Yeah.
I'm sure clients love that little.
And any kind of question like that, I usually handle it the same way I do in chat rooms, which is, what regulation agency do you come from? So, I'm really not going to give you any recommendations. I'm just kidding around there.
With that, we're going to close out the old Express block and roll right into Around the Block.
As an options trader, you're always looking for a way to stay ahead of the game. At Option Pit, we specialize in trade structure, risk management, and capital efficiency to give you that edge. Every Wednesday before options expiration, join us for a free webinar discussing timely topics with expert guests. Just go to optionpit.com/events. At no cost, we'll provide you with the time-sensitive information you're looking for. Option Pit. We optimize your time by being the only resource you need to be successful.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions. And everyone, we talked earlier this week about what a data-heavy week it is, and tomorrow is the mother of all numbers, you could say, for this week. Of course, the non-farms probably contributed to some of the sell-off towards the end of the day as well today, as people were taking their risk off the books ahead of the numbers this tomorrow. So I'd imagine that's the bulk of what everyone's watching is going into tomorrow is the non-farms. Anything else you guys are watching in terms of earnings, or any of the names you're watching, Sebastian, the commodities, Tim, or anything else?
I'm going to be watching crude to see if it continues this run. It's up at the 106 level. I'm curious to see if it can go any further. My eyes are definitely slippery from watching this oil.
I know you're into XLE and a lot of the broad indices. Do you play around in USO a lot too, Uncle Mike? Or
not a huge fan of USO.
Or the big futures options then?
Yeah, I have a couple clients on the future side of it, on the brokerage side of it, that are in some. We have a little bit of exposure to call spread on crude right now, but nothing of any significance. Just kind of just a short-term trade of nothing huge.
So you close out all those upside calls at the 200 strike then?
No, did not open those, I have to say. So
your day of rage lottery tickets, and then of course, Mr. Navabi, what are you watching in terms of the ag markets? Obviously, wheat, a big name for you these days. Contributing on that report you mentioned last week about how some of the wheat fields are not exactly in too good of a shape right now, and contributing to all this upside we're seeing out in wheat.
Yeah, it's going to be interesting. I mean, today, I had a little bit of the feeling like it was the last day of school. It's the end of the quarter. So, I think tomorrow, we probably should expect some volatility. Whether it's institutions or money managers, individual investors, whatever. Now we're over with the first quarter. We can measure ourselves to see if our expectations were met, and go forward. So yeah, I mean, everything's pretty much on the table to look at. Non-farm payroll is going to be a big one.
Yep.
I thought it was real interesting. I saw a blurb, best S&P quarter in 13 years, right? So that kind of flashed a warning.
Amazing. Even post tsunami, post Libya, everything else, still the best quarter in 13 years. Wow.
Yeah.
What does it take to derail the bulls? And Sebastian, you care to make any flying crazy predictions on non-farm tomorrow?
I don't have anything crazy. Just based on what I'm looking at, the fact that they're really pricing it to do nothing makes me think it is going to do something. I wouldn't want to touch it. So I've got.
You talking about equities?
Right now, the SPX April 325 straddle expiring tomorrow is trading about $10. Looks like right at $10. I would not want to sell that straddle and have to deal with all of tomorrow at $10. So I think vol's kind of cheap. I get the feeling we're going to get a little movement tomorrow, but I'm just not sure. So I don't know. Other things I'm looking at is I've been watching skew, not the SIBO skew, which I also do watch, but just general skew. The curve is really flat right now, and there's a lot. It is not expensive to buy protection, and I would encourage all of you premium sellers out there. It's not expensive to buy S&P 500 puts. It might be worth your time. They are really inexpensive right now. The cheapest they've been since the middle of February, which was the cheapest they'd been since in about a year. So I would strongly encourage you guys to put some hedges out. So that's what I'm looking at.
Yeah, we mentioned that in some of our other shows too, with obviously the volatility show where we get into these topics in depth. That we would talk quite a bit about how
volatility show. Do you have somebody that speaks it that's going to be talking on your volatility show?
I don't know. We're looking for a field reporter to come in and talk about some occasional topics. So maybe we have some room for some grease on that program. We'll see. We'll see if we can squeeze you in, greasy as you are.
The meatball on the street.
But yeah, we have been talking about how we've been waiting for some buying opportunities in terms of downside protection, and this is recently one of the few times we've seen that coming in, where every time we've watched, and how many times have we talked about on this show, where it doesn't matter what's happening in the VIX and what's happening in the SPX, that downside skew was still steep. Now we're seeing finally, even though it's come up a little bit in the last few days, it's still, compared to where it was, it still is one of the few downside hedging buying opportunities we've seen out there. So yeah, I agree.
Yep.
If you are concerned about these levels, if you're concerned about non-farms, if you're concerned about Libya, anything you're concerned about, go out there and pick up some downside and call good old Tim Navabi to do it. He'll get you a great execution. And with that, I think we're going to wrap up this slightly abbreviated but still quite fun episode of the Option Block. I want to thank all of my cohorts, my partners in crime here for joining me on the show. Starting off with the Greasy Meatball himself. What's going on over in Option Pitland?
As we said, it's our 1-year anniversary. And so we're out celebrating.
You giving away an iPad or something? What are you doing?
No, you know what? Let's give away a prize. How does that sound? All right. The 10th listener to email me, I'm going to give a free 1-year subscription to TheStreet.com's Option Profits team, of which I am a writer. So the 10th viewer to email me, I'll reveal the name on the next show.
Do you want to give out your email address, or do you have some?
Yeah, email us. It is Mark, M-A-R-K, at OptionPit.com.
See, there you go. That's why I always tell listeners, stay tuned all the way through to the end of the show. Not only do you get the fun outtakes and things that occur at the end, but we have some good deals that pop up every now and then, too. So There you go. The 10th emailer. Hit up the Greasy Meatball. Put Greasy Meatball on the subject line.
That would be a great, yes, do that. All right, do that.
You're guaranteed to spot those, I would think.
Yeah, exactly.
And then Uncle Mike from the mountains. What is going on? What are you giving away over at Know Your Options, Inc. to celebrate the Option Pit 1-year anniversary?
I'll tell you what. If someone stops by our office, I'll buy you lunch at Subway. Then how's that?
That is. So. I'll be over there. I'll see you tomorrow.
You talking the full Subway Club or one of those little 6-inch, daily deals?
Are we talking?
I will. Oh yeah, the greasy meatball sandwich will be bought at Subway. If someone stops by the office tomorrow on Jackson Street, we will buy you a Subway footlong.
So our Chicago listeners, type in Know Your Options into Google Maps and then show up to their offices around 12:30, and you will have a nice meatball sub waiting for you.
111 Jackson, 11th floor. Come on up, folks.
Meaty.
Well, aside from meatballs, I'm sure you have some webinars going on this weekend.
Yeah, a couple of them. Sunday night, tis the season. It is IRA season, so a lot of people have put money in an IRA and may be curious about what to do with it. We're going to have a webinar on Sunday night, trading and investing in an IRA. And then on Monday night, we have a webinar on strike price selection. And then, if you are in the Southern California area, Saturday, April 9th, I will be guest speaking at the Options Express event. We'd love to have you come out. There are people in Orlando that know we exist, so we did have a following in Orlando. So if you are in the LA area, come on out to the Options Express event and say hello. I'd love to meet everyone that I can in person.
Follow Uncle Mike around the country. You have some groupies out there. It'd be fun. And, listeners, we did have some listener questions we were going to get to today, but technical difficulties made that difficult, but we'll get to them again next week, so don't worry. Your questions and silly comments will be answered soon enough. And then, of course, Mr. Navabi, what is coming up in the land of Options Express?
Options Express, well, Mike did mention the live event in the California area on April 9th. We also have some webinars coming up on April 5th, 1 p.m. Eastern. There's a monthly futures outlook with Jim Wyckoff. On April 6th at 9 o'clock Eastern, there's Introduction to Options Part 5 titled The Short Put. So,
wasn't that your nickname in college? The short put, Navabi?
No, it wasn't.
I threw the short put in high school.
Oh yeah?
Yeah, I threw the short put.
That. I bet you were good at it too.
No, actually, I really wasn't.
No?
No.
What? But was it the form? Was that the issue?
No, I quit before it really mattered, I think.
Oh, I gotcha.
I quit. Just wanted to focus on football instead.
Fair enough. I understand that. That makes sense.
You did the old football and field deal, just like myself. Yeah, that's what a lot of the linemen did.
Yeah, after about 2 of those indoor track meets where you throw the shot put 3 times, then you sit for 8 hours watching people run around the track, I had enough of that.
Yeah, it wasn't the most scintillating thing.
No.
All right, and then, of course, listeners, if you want to hear more of the unusual activity or read any of the interesting insights we have from our panelists here, just surf on over to theoptionsinsider.com. We have all of that and much more waiting for you there. And I want to thank all of our listeners for downloading and streaming and subscribing to this show And beware of April 1st tomorrow. Don't make any crazy big trades. And other than that, we will see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The Option Block is sponsored by Options Express. When a broker emerges to lead an industry like Options Express, it's only natural to want to join them. Options Express has excelled with powerful technology, an innovative platform, and exceptional customer service. Others wonder what they'll do next. Stocks, options, and futures all in one account. Visit optionsexpress.com/OXradio for your free account. Options and futures involve risk and are not suitable for all investors. Please read the characteristics and risk of standardized options and the risk disclosure statement for futures and options, both available by calling 1-888-280-8020 or visiting www.optionsexpress.com and clicking on the Risks and Policies link. Options Express Inc. makes no investment recommendations and does not provide financial, tax, or legal advice. The views and opinions expressed on the Option Block are not those of Options Express or the Options Insider Incorporated and are strictly provided for educational and informational purposes only. Any mention of specific stock options, futures, or other investment products is not intended to portray a recommendation to buy or sell a particular security. Options Express Incorporated is a member of FINRA, SIPC, and NFA. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.